Hi, Deb Pervin here, and I'm back on the sailboat. And today's Tuesday tweak is about your accounts receivable days outstanding. What I'm seeing with my clients is accounts receivable are starting to get stretched, which means your clients are pushing you to hold them longer, probably because they're having cash flow issues. And this is a domino effect because then you'll realize that you're having cash flow issues. So, what do we suggest? What do I suggest? Make sure that you keep track of your days outstanding. So, days outstanding will help you determine how long it takes to collect. And it's simple math. So, when you have accounts receivable, you're acting like your bank for your clients. First, you provide them a service or a product, and then you bank them because while they're not paying you, you are still paying all your employees, all your vendors, all of your bills. And you have to wait for them to pay you so that you can you can have dollars in the bank to pay yourself. So, how do we do it? Well, the accounts receivable days outstanding is a combination of both your profit and loss and your balance sheet. So, your first step is get your accounts receivable for year end and then get your total revenues for year end. So, here they are on this company's balance sheet and profit and loss. Next, you just divide revenues by accounts receivable and you get a accounts receivable turns. Now, this number may not mean a lot. Here it's 3.8. So what we do is our final step, we turn those into days. So divide that turns by 365 divided by turns. So 365 divided by 3.8 is 96 days. Ouch. That means it's taking 96 days to collect an invoice on average for this customer, which means that's a long time. She's going to have to pay all of her people for 96 days before she collects that receivable. So, how do you compare this to your payment terms? Well, most payment terms are 30 days. Sometimes you can make them 15 days. That could be part of your negotiation with your contracts. But then, are you being paid on time? And if you're not, what are your practices? I hope that you're charging them. I hope that you're charging them for past dues. I hope that you're calling them. I hope that you're reminding them that you're not their bank and that you need to be paid so you can make your payments. Now, what I recommend is you track this days outstanding number every quarter. So we just did fiscal year end. So for first quarter, you take the first quarter of 24 and you add it to the fiscal year end of 23, and then you subtract the first quarter of 23. So that's how you get a rolling 4-quarter number. And you only have to do that for your revenue. And then you divide it by your accounts receivable at the end of March. So then you can compare, am I doing better or worse than year end? So if you're working on collecting these payments, you'll see that you're making progress. Progress is slow, but it's got to happen because otherwise your cash flow is going to suffer and you're going to have to borrow money and you're going to have to pay interest rates. When you improve your collections, you improve your cash flow. All right, I'll see you next week. Bye-bye.